Hello everyone, welcome to my channel. This is Easy Accounting Channel. Today we are talking about partnership. So what is an agent or a nominee? An agent is a person that is authorized to act for another person, while a nominee is a person designated to act for another. So these are not definitions provided by the Income Tax Act or Income Tax Regulation. They give only the common usage of the term for the benefit of the reader. So what is partnership? According to Income Tax Act, Section 4, E16C, define a partnership as the relationship that exists between persons carrying on business in common with a view to profit. So taxpayer can determine whether they are partner in a partnership by examining the type and extent of their involvement in the business and checking the laws of their province or territory. A partnership can be formed between individual, corporation, trust, other partnership in any combination. So partnership can be formed verbally or by written contract. So how do partnership business differ from other type of businesses or corporation? So a corporation has a separate, distinct legal existence from its shareholder. However, a partnership does not have this type of separation or distinct legal existence from its partnership. So a partnership is not treated or taxed as a separate person. So all income and losses are flowed out to the partner who report their share of the partnership income on their own tax return, either on their T1 or T2 or T3. Who has to file a partnership information return? So a partnership that carries on a business in Canada or a Canadian partnership with Canadian or foreign operation of investment must file a return if either of the following occur. Number one, at the end of the fiscal period, the combined absolute value of the partnership revenue exceed the revenue and the expenses exceed 2 million or has more than 5 million in assets at any time during the year. And the partnership has a corporation or a trust as a partnership, and the partnership is a share partnership. So how does CRA determine whether a partnership has more than 5 million in assets? So the cost figure of all assets worldwide, both intangible and tangible, without taking into account depreciation amounts that should be used to determine whether a partnership meets the more than 5 million in assets. So if you're a nominee or an agent, what are the requirement to file the T5013, that is partnership form information return? So every person who holds an interest in a partnership as a nominee or an agent for another person, they have to file separate form T5013. And also the slip for each partner in which the interest is held for another person. So nominees are only required to file T5013 slip and the form T5013 summary related to for each partner in which they hold the interest. So what financial details should be used to determine whether a partnership meets the 5 million or 2 million assets? There are criteria that are set that we should explain in this slide. So the revenue and the expenses detail from the financial statement amount. So revenue refer to revenue that has not been netted. For example, you will not use gross profit to represent revenue since gross profit is revenue minus cost of goods sold. So expenses include both current cost and capital cost. For example, depreciation. Then for revenue from all sources, revenue that have not yet been netted, they are added to the total of all the expenses, and the total is used to determine whether you meet the criteria or not. So I give an example here. Financial detail, the revenue is $1.5 million. You minus the cost of goods sold, which is 850,000. Then the gross profit will be 650,000. Then we minus the expenses, 400,000. Then the partnership will have to file a return since the absolute value of revenue plus the absolute value of expenses is more than 2 million. So we can say now that the absolute value of the expenses is 1.250,000, which include the cost of goods sold, 850, and the expenses. So these are the criteria that you have to meet before you can now say you are entitled to this. So what are the partnership losses? Although partnership can have a loss, so a loss carryover rules applies to each partner and not to the partnership. For example, when you complete your own income tax return, you combine the share of the partnership non-capital losses with any other non-capital losses you have in the year, and you apply this against your income. So where to send your T5013 partnership return? You send it to Prince Edward Island, Tax Center, 275 Pope Road in Prince Edward. You can also do internet filing. It offers the following, like your confirmation within minutes. You will receive an electronic submission number within minutes of sending your partnership return over the internet, and it is secured. So CRA use the transport layer security TLS protocol. TLS protocol allows general communication, authentic and encryption over TCP. And also the national, you can file from anywhere in Canada, and it's also environmental friendly. And also the electronic amendment, you can file an amendment return electronic, an electronic filing method for 5213 partnership information return. So you can use my business account or represent a client's account. So we also have to talk about the GST and HST rebate for partners. So if you are an individual who is a member of a partnership, you may be able to get rebates for the GST you paid on certain expenses. You may qualify for this rebate if the partnership is a GST registrant and you personally paid this GST on expenses that you did not incur on the account of the partnership, and you deducted from the share of the partnership income on your income tax return. However, special rules apply if your partnership paid you an allowances for these expenses. They paid you allowances for these expenses. Expenses of example of expenses subject to GST are vehicle cost, certain business use of all expenses. The rebate may also apply to GST you paid on your motor vehicle, musical instruments, aircraft, which you deducted. So I give an example here. If in 2020, you receive a GST or HST rebate for 2019 fiscal period, you have to include the amount of the rebates on your income tax and benefits return for 2020. So partnership that are subject to specific investment flow through tax. So partnership has to pay income tax in monthly instrumental when the total of the part 1(9) tax payable for either the previous year or the current year is more than 3,000. So if the SIFT, that is the specific investment flow through tax, is liable for tax under part 9.1, section 197 for the tax year, the amount of the income that will be subject to tax in the hand of the member of the partnership under P1 will be reduced. So the difference between the partnership taxable non-portfolio earning for the year and the tax payable by the partnership for the tax year under part 9.1 is deemed to be a dividend received by the partnership from the taxable Canadian corporation. Let's look about the capital cost allowance for partnership. So a partnership can own depreciable property and they can claim capital cost allowance on it. Individual partners, however, cannot claim CCA, that is capital cost allowance on property the partnership own. So from the total cost of depreciable property, you subtract any investment tax credit allocated to the individual partner. Then we consider this allocation to be made at the end of the partnership fiscal period. So you also reduce capital cost by any of the government assistance that you receive. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel and share my video. Thank you. Bye.